For example, there is basically bonds, fixed income instruments in Europe. Some of them are already being issued on the blockchain, so they use this protocol. So these are the 4 building blocks of digital asset in the EVM or the Ethereum network. Okay, let's move on. So let's look at the past and current landscape. I call that a revolution. We have the crypto exchanges, stable coin, decentralized exchange. Of course, then it went to decentralized finance, sidechain and layer 2 solutions, NFTs, and now the latest one is tokenization and fractionalization. So we will go through all these topics one by one. So the whole idea is that each of them is actually connected. One will not start before, for example, crypto exchanges started because in response to the ICO. So that's how it works. And DEX basically started in response to stable coin and of course the crypto exchange, the centralized crypto exchange. Okay, token and ICO revolution. So of course it all started with Ethereum because Bitcoin does not really allow anybody to issue tokens on their blockchain. So it started with Ethereum and the ERC20 contracts. And the big difference it ushers into the market is that now people can basically create their own crypto token to basically fund their project through crowdfunding. ICO is actually a form of crowdfunding. Later on, of course, they have an IEO, which is initial exchange offering. But the problem is that when it first started, of course, there was a lot of scam because there were no regulations at that time when it started. The first regulation only started to come around late 2017, 2018. That was in Singapore and in Switzerland. Okay, and for example, in Malaysia, the guidelines only came out in 2020. So it took time for the regulators to catch up. But by that time, there were so many of these projects, ICO projects out there. And of course, a lot of them were scams, but they were also real projects. So what happened there is that when the regulation came out, it basically specified the type of tokens that can be issued. So there are now basically 3 types of token: utility, payment tokens, and assets/security tokens. So those are the 3 types of tokens that's been basically designated by the authority. This is based on the Singapore and Switzerland law regulations. The centralized crypto exchange. So what happened after the ICO? So of course, in response to the ICO, the investors of this ICO wants basically an exchange where they can trade their tokens, where they can sell their tokens or buy other tokens. So in response to that, crypto exchanges started to crop up. And for example, Binance, which is now the largest crypto exchange in the world, started as an ICO project. They raised about $7 million when they first started off. Now Binance is a multi-billion dollar company, but it started basically as an ICO project. So as you can see here, the crypto exchanges basically was set up in response to the ICO. So, without the ICO, the crypto exchanges won't be there. See? So the crypto exchanges, or what we call CEX, i.e. centralized exchange, they basically serve a purpose of providing an exchange for coins and the newly created cryptocurrency. Okay, let me basically clarify there. Coins, from now on, coins are defined by basically those that have their own blockchain, like Ethereum, Doge, Bitcoin. Those that have its matic, those that have its own blockchain, I would call it coins. Cryptos are basically tokens created on these other blockchains. So this centralized crypto basically relies on manual market making trading book to make the market, the active market, the buy and sell in the exchange. Yeah, and a lot of this market maker was basically what we call large liquidity providers. These are actually hedge funds. So the hedge funds has been in the market from the start. A lot of people thought that the institutional investors wasn't there, but they were there from the start. From the start, the hedge funds was the one that basically provided the liquidity for all the centralized crypto exchange. Most of them are hedge funds. The need for stable coins. Okay, when the first exchanges started, they had a lot of problem to basically open a bank account because banks at that time were not supporting crypto because they didn't understand it at the time. They still don't understand it now, but at the time they didn't understand it at all. So a lot of this crypto exchange wasn't able to basically open a bank account. So that means there were not a lot of contract to macam like for example now if you go to Luno you can have BTC ringgit pairing, or you know at that time if you go to Coinbase BTC US dollar. But when it first started they had a lot of problem to basically open a bank account. Even Tether had a problem to open their bank account. But so in response to that, and because they need to have a crypto, they need to mimic the crypto fiat trading pair, the crypto industry decided to come out with stablecoin. So you heard about all the stablecoin before. So the first stablecoin that came out was Tether USDT. That was the first stablecoin to come up, basically back to fiat-based assets. And the stable coin basically is quite important because it serves a few purposes. Number one, of course, it allows easier crypto to fiat trading pair. Number two, it allows basically easier user onboarding. And of course, it is a flight to safety because for the first time, people can basically still remain in the crypto world, but now if let's say they don't want to basically get price fluctuation, they can just buy USDT or convert swap their token to USDT and basically be pegged to the US dollar. So that was what so that's why stable coin is quite important to the exchange and also to the user. But as you know, I think if you follow the market, something happened. Terra happened. UST, Luna happened, and because there were no consensus about the market players at that time, they categorized everything as stable coin. The real stable coin, in my opinion, if it's a stable coin, it should be the stable coin should be backed by actual US dollars or basically US dollars treasuries or whatnot. But the problem was that basically a lot of other people came into the market and they started to basically put questionable assets. And some of them like Terra or Luna, they just mint their own token and call it a security. So that was obviously a problem. And that's why basically Terra, Luna, basically, at the end of the day, they basically went down because people then found out they don't have any basis, to basically, those coins cannot be used as a security because it doesn't have, and it cannot be pegged to the US dollar because it's basically created out of thin air. So that's what happened to Terra and Luna. So the real stable coin should be basically, in my opinion, are USDT, which is backed by a collection of US dollars assets, liquid assets, financial assets, and USDC, which is actually backed by actual cash in a bank account. So those are the real stable coins. So people have to be quite important. But as you can see, why stable coin came out is to react to a certain issue that the crypto exchanges had at that time. Okay, so what happened then was basically the crypto exchanges, the centralized crypto exchanges and the liquidity providers started to control the market. And they basically set very high fees for people who want to basically list their token in the exchange. So there was a need to democratize the market. So, and hence, that's when decentralized exchanges came out. Yeah. Of course, the most famous one is Uniswap. Okay, but before Uniswap, there was two exchanges, Ether Delta and Fork Delta. They came out first, but they still use the manual market making basically way of providing liquidity. So, but Uniswap was a game changer. It became the game changer in the whole industry. Because Uniswap works on liquidity pool, yeah, and when in a liquidity pool, anybody, any issuer can now list their tokens without paying high fees to the centralized exchange. Okay, because they can create and basically their own liquidity pool within the exchange. And any traders can exit their position because this liquidity pool basically works on an automated market maker that guarantees 100% trading liquidity at any point of time. So that's the game changer partner. And of course, any user can earn passive income by adding new funds into the liquidity pool. So nowadays you hear people talk about staking, about yield farming. All of this started because of this liquidity pool. So that's why Uniswap was a game changing. But again, Uniswap came out to react against the centralized crypto exchange and this large liquidity provider controlling the market. So in response to that, the decentralized exchange started to come out. Let's talk more about so the first, in terms of decentralized finance, DeFi, the first one was, of course, decentralized exchange. Okay. And the most important contract here is basically the Uniswap V2 core and periphery contracts. These are the game changer smart contracts that basically started off the whole DeFi revolution. Without these smart contracts, before this, nobody have thought of these smart contracts. So these guys who basically started off Uniswap, they were basically a pioneer. They started this, and because from here, they basically came out with so many functions, and the most important there is basically ability to deposit, and basically, all the staking, yield farming, price oracle, all these things started off from this Uniswap V2 smart contracts. Without this and all the other exchanges nowadays, most of the decentralized exchange or DeFi project use the same Uniswap V2 core and periphery contracts. All of them use the same contracts, most of them. But now obviously there's some improvement on it, but most, if not all of them, use the same core smart contracts for their protocol. Yeah? So of course, lending is a big part of DeFi. So lending is basically this protocol like Aave, and then DeFi went to oracles like Chainlink. It's an oracle. There's on the DeFi front, yield aggregators, asset management, and even decentralized insurance. So DeFi is basically all of this, and is basically expanding. Even of course, last month, we have the market basically coming down. But even though that happened, DeFi is still growing in terms of basically people using their protocol. Even banks now are basically, or even banks and some of the traditional stock exchange are now looking at that DeFi technology to basically, help them to create a more basically, efficient exchange in the future. Okay, so the problem then was that the DeFi activity started to rise significantly, that it affected the Ethereum network speed. So this happened basically about a year ago or 18 months ago, when the Ethereum gas fee suddenly went up very high. When DeFi started to be more popular, the Ethereum gas fee started very high and people started to complain. So what happened then was that we have all these side chains and layer 2 solutions started to come out. The first one was Binance Smart Chain. Of course, now you have a lot more basically layer 2 or side chains being launched. You can see all familiar names there like Cardano, Polygon, Tron, Avalanche. All of these are basically side chain or layer 2 solutions that came out to react to the slowing down of the Ethereum network speed because of the popularity of DeFi projects. So that's why this chain started to come out. A lot of these chains only started to come out 1 year ago. 1 year, maybe 18 months ago. So it's still very new, but they all basically have a lot of traction. But the most important part here is that because it's an EVM network, bridges were basically created which allow cross-chain ability. So that means basically I can have my token, a Polygon network token, but I can use a bridge to go to the other side chain. So by doing that, it makes basically this whole EVM network becoming bigger and bigger and more compatible to each other. Because again, when I talk about EVM network, as some of you may know, that means I am still using the same Solidity programming. So my code that I basically I do it, if I launch it in Ethereum, can be used in any of this blockchain without any changes. So that's why it's very important. So I don't have to change the code of my dApp. If let's say I go to another chain, another one of this layer 2 chain, I can still use the same app that I developed. I can still use the same coding. Then I can just use the other chain. All right, so let's talk about NFT. From kittens, apes to metaverse. Yeah? So as you all know, NFT started with CryptoKitties back in 2017. At that time when it first came out, it nearly slowed down the Ethereum network because it was so popular. And then of course, we have a lot of apes started, as you all know. There's so many types of apes in the open sea. You can see all of them. But now basically, when you go to all these big marketplaces, right, OpenSea, Rarible, and even our locally grown pentas, you can find a lot more items in there. Yeah? So it's not just about digital art. NFT, they are now basically music, comics are there, memberships, even event tickets and movie. There were also movies that was created specifically for the NFT marketplace, where people can only access if they have the NFT. So these marketplaces have basically added all these things inside there. And of course, you have the GameFi, okay, where basically you can buy all the in-game item, you can buy and sell it. the in-game item that basically you win, in the marketplace within the game itself, so people can make money out of it. And of course, now, as you know, there's something called metaverse. Decentraland is a good example of a successful metaverse project, where basically people actually buy and sell digital real estate. People cannot buy, and this digital real estate, their value is basically similar to normal real estate out there. So these are the NFT universe. So it's getting bigger and bigger. But the most important is here, because I am doing an NFT, and NFT is not a quote unquote normal token. I can do this without basically having to worry about licensing, because each NFT is unique and represent an asset at the back. So a lot of these marketplaces, like for example, Pentas, Pentas is, of course, they're not licensed anywhere. You don't need to get an SC license for this. You can just start it on your own, because you are not selling normal tokens. You are selling actual products at the back of the token. You are just using the NFT as basically a way to basically sell other products. So these things, anybody can do it, and you do not need to get licensed for this. I'm basing it on the licensing. I'm basing it on overseas. In Singapore, there's a lot of NFT marketplaces as well. They don't get licensed for this. They don't need any license. Okay, let's talk about tokenization. So some of these NFT are quite expensive. Some of them are priced in the millions. So the idea of then dividing the NFT into smaller pieces came about, and that's where fractionalization started. So there are now certain websites out there that allows you to fractionalize an NFT into smaller pieces, and they use the ERC 1155 to do that. So what they do is that they keep the main NFT into the factory contract, and then they will create let's say 100 pieces of the token to represent that particular NFT. Again, they're using the factory smart contract, the same smart contract that you used for. And of course, the uniqueness of NFT is the ability to store the URI, where basically your digital asset is being kept. So that makes it an ideal instrument to tokenize other things. For example, in the US, they are already doing tokenized real estate, and there's been quite a few projects that is already doing gold, and of course, like my own carbon credit projects. Is it? So this is called tokenization. So this is being done out there already, overseas. So the future landscape, plenty of them. Okay. I think all of you heard about Web3 revolution. Web3 revolution means user now basically have economic ownership of their own data. So that is coming. In the future, you own your own data, and you can sell your own data because it's yours. It's not Facebook or Twitter or whatnot. Those are, those are Web 2, is it? So Web 3 will change everything. Nowadays, we give our data for free, our own data for free to Facebook, and then Facebook make money. In the future, basically, you control your own data. So that's what Web 3 will do. And you can see there's a lot of basically sectors where this will change in the future. And this is my opinion, but this is what it is. Healthcare is one big one. Of course, smart education is there, energy. So there's a lot to take in here. But anyway, I will make a copy of this available anyway. So, maybe the organizer can share it with anybody who wants the copy of this. Because if I go through each one of them, it will take time. So crypto blockchain technology is really going mainstream. That's from what I think the future will be. Yeah, more economic sector will be adopting blockchain, which they are right now, and I can see that the new projects will be more real world. That means it can be used in the real world. It's not just something digital. Increased tokenization. The future projects, because what it is that if you want to blockchainize a real world product, you have to tokenize it. That's how it works. And that will lead into more marketplaces. Okay, because everybody would want to have a place where they can buy and sell the digital asset or the token that they have. Yeah? So this is what I think will happen. Yeah? Okay, there you go. Blockchain adoption, a lot more is coming up. So again, it's difficult to go one by one, but you can see just from this graph alone, you can see the potential and how a lot of the mainstream mainstream real world industry are going to blockchain. They are adopting more blockchain technology in there. Yeah. So wills and inheritance, that will be a big part. Real estate, of course. Travel, airlines will probably don't issue any more tickets, right? They will issue NFT. People buy NFT, that is their ticket. Their ticket will be in the form of an NFT. Right? And so everything will be basically going into the blockchain. Because at the end of the day, as you all know, it's all about whether you have a centralized system which is controlled by a few parties and which is prone to basically human error, okay, or you have basically a decentralized system which is not controlled, which nobody can manipulate the data, because that's what blockchain is. So that is the advantage of using blockchain against using a centralized server. Centralized server can be manipulated. Blockchain cannot be manipulated. More tokenization. I think you will see this. More unit trust, ETF, fixed income instrument, they are all going to be issued in terms of tokens. Fixed income have already started overseas. ETF, they are in certain countries, like in Canada, for example, they're already issuing ETF in terms of ETF on crypto, right? Unit trust, that means rather than you issue unit trust, you can issue it in the form of a token. So there will be increased tokenization of a traditional financial instrument. There will be more issuance, tokenization on intangible assets like patents, licenses, royalty, trademark. Royalty basically is already done. For example, there are NFTs out there that you can program the royalty payment inside. So that means if there are artists who have their own music, now they can basically have the royalty. Can be every time that copies of the NFT get sold, he will get the royalty directly to him, not to some record company, big wigs or whatnot. Tangible asset. This grants title refer to real estate. Okay, like I say, in the US, they already started this. Dubai also, they already started this. Precious metals. Some countries have already, there are a few crypto projects basically that tokenize gold, for example. But this can be done. Of course, they don't tokenize the actual gold. They actually tokenize the safekeeping certificate of the gold in the vault. That's how they do it. Most important is this, consumer goods. Okay, NFT marketplace is actually, if now you have Shopee, if Shopee decide to go to blockchain, what will they use? The system that they will use, NFT marketplace. Because of the NFT nature of being a unique asset. That means any items with SKU number, IMEI number, whatever it is, can basically be tokenized as an NFT. So if, let's say, Lazada wants to do a blockchain marketplace, they will use the NFT marketplace as their backend. So that's what it is. So and there are already some of this, some websites are already doing this, you see, and NFT marketplace, but they sell normal consumer goods. So I think basically once, somebody will be doing this quite soon in a big way. Because the good thing about running a decentralized system is that everything is run by smart contracts. So, so that means the company does not have to spend a lot of resources on people to basically key in stuff on the back end. And of course, there are more marketplaces. And this is quite important. Because every marketplaces that will come out, or exchanges, will have their own product token, i.e. the tokenized product, and it will have its own utility token. Every one of these marketplaces will have the same thing. Because they will come up with their own utility token to use as the medium of exchange in their marketplace. And it will also, in the future, help them to basically raise more capital. But most importantly is that it will also lead to demand for the system coin that the marketplace is using the network. Because all transactions will need to pay gas fee. Gas fee is being paid using the system coin of the blockchain network, which the marketplace is built on. So you can see now the trend, you see. So the trend will be more of these things coming out, maybe even more layer 2 solutions coming out, more EVM compatible blockchain coming up. So this thing will go bigger and bigger. But the thing is, because of the bridge that I showed before, so it's not an issue anymore to come out with your own blockchain. I think if there's anybody who's doing computer science here who knows about blockchain coding, it's very, very simple to launch your own blockchain. It takes about tops 20 minutes. Doesn't take that long to start your own blockchain. Using the EVM compatible. Okay, let's talk about the market in Malaysia. Okay, because of course this is dear to all of you. In my case, since my company is not a Malaysian company, I don't do business in Malaysia. I only live here for a short while every year. So, this doesn't bother me that much. But anyway, here is it. Right, I think you all have seen all the 4 DEXs out there. Uno, Tokenized, Synergy, MX Global, and unfortunately, those are the only coins available that you can buy legally in Malaysia. So it's very limited. Knowing that there's about 5,000 over tokens out there in the world. So there's only about 8 tokens that you can legally buy in Malaysia through the Malaysian licensed crypto exchange. So, probably that's why they're not growing as much. That's my opinion. And there's no operating IO operator. That's why you don't see any legal local crypto issuer up till now. The SC only have given 2 companies, have registered 2 companies for this IO operator license in March this year, after they came out with the regulation in 2020. So it took 2 years to register 2 parties, and they are not operating yet. So that's why up till now, there have not been any legal local crypto issuer in Malaysia. So that's why the market didn't grow. Well, of course, you got good guys like pentas.io. They just went ahead and do it. But again, they are doing NFT. They're not doing tokens. So NFT does not fall under the regulation. Yeah. Because you're not selling a normal token. You're selling a token backed by assets. And there are some, I've seen some metaverse project and GameFi project by Malaysian companies. So they have some grandiose name like Battle of the Seas or whatever they call themselves. But there are some of these projects started to come out. But unfortunately, some of them have decided to move their registration overseas. Again, the problem why? Because they need to sell tokens, normal tokens, to basically raise capital. So the only way they can do it without falling foul of the regulation in Malaysia is to register their company overseas. So that is the advantage to the company to the whichever overseas they go to. Most of them started in Hong Kong or something. So that's the issue. So unless they get this IO operator operating now, Malaysian companies, they're going to lose more and more talent to overseas. So that is the problem in Malaysia right now, because you cannot issue tokens.
Sorry, Mr. Rashdan.
Yeah, that's it.
Interrupting you.
Yeah,
I would like to inform you that we have only 2 minutes left before we go to Q&A session.
Yep, that's the end of it. So, any questions? Let me know. I have made a copy of this available to the organizer. So, organizer, feel free to share this. And you can see my LinkedIn profile there. You can check my profile or whatever it is. It's all there. It's all public knowledge anyway. Yeah. All right. Thank you very much. Let me just.
Mr. Rashdan, I think there is a question in the chat box.
How do I see the chat box?
Okay, let me read it for you. This is from Anin FIMS. Thank you, Mr. Rashdan, for the interesting sharing. So the question is, I would like to ask a question. Can you share with us the risk related to the digital asset so that investors out there can be more cautious on their investment? So can you explain more about this question?
When I first started in the financial market, I was a bond dealer. I was a bond dealer in Petronas. I was a bond dealer. Basically, caveat emptor. It's a Latin word for buyers beware. Yeah, so that means, like I say, not all crypto is scam. There are some good projects out there, but people just have to basically do their own research. For example, I was giving the example of stable coin, right? Okay, so why would when Terra first came out, I was thinking, why would somebody mint their own crypto and say this is my security? That doesn't sound right, isn't it? So people need to know themselves and say, hey, hang on, how come they do that? That is not a security. If let's say UST was backed by BTC or Ether, then it's different. But these guys, they come up with their own crypto, Luna, Terra, whatever they call themselves, and they say, oh, this is my security. So if I'm when I first saw that, I was like, something is wrong here. It doesn't look right. It doesn't read right. It smells very bad. So I won't go for that. But of course, many people went for it. They don't do their own research. So that is so crypto is still something that it's just like normal shares. You buy equity pun, you do not know whether server dynamic will go up ke, go down ke, ada banyak scam ke, you do not know. Just the back, when I call crypto or digital asset, it's basically just the technology behind the product. There's nothing to do. The crypto can be backed by Malaysian ringgit bond. So that makes it a good crypto, right? So you cannot lump crypto or digital asset as one type of product. It's a different product. It's just a back-end system. Itu aja. So I hope I answered that question. Any other question?
I think there one more question from Fawzul. He said that, hello, Mr. Rashdan, I would like to ask, is it worth to invest in digital investment for now? As we know, we are currently in post-pandemic era and inflation situation that occurred in Malaysia.
If there is a good project, yes. But like I said before, everybody have to do their own research. Do your own research. And then the day, that's the best way. Like I say, digital asset is the back-end product. The product itself is Ether, is Bitcoin, is Terra, whatever you call it. You see? The technology part is called digital assets. The asset the actual product backing the digital asset or the token can be anything. So when you buy something, you must look into the actual business which the digital asset is based on. You must look at that. You have to be that's the way to look at it. So if you find a good project, for example, if let's say pentas.io one day come up with their token, I will buy, because I think they are doing they are running their project very well. It's as far as all we know, it's the major homegrown NFT platform. Many local artists are there. So I would support that. I think that is a good investment. If let's say they issue, but of course now they cannot issue legally. But let's say when the IO operator get their license, maybe Pentas may issue some tokens. So I might buy, I myself, I've always supported Pentas since they first started. As you know, they were basically a bunch of master students, right? From I think one of the local uni. So yeah, I would support them. So I think they have a worthy project. Yeah. So check their actual underlying project, not just because they are a digital asset. Check their project. Just like you buy shares lah. You buy share, you will basically read the prospectus, right? Read all the research report. The share itself is not the issue. It's the company, right?
Okay. So
Oh yeah, if you want to buy any other coins, go and buy Ethereum. Ethereum will go up because of the merge coming in. If you want my advice, go and buy Ethereum. Anyway, yeah. Any questions?
we have one more question from Sister Baiduri.
Okay, hi, Assalamualaikum and good morning to Mr. Rashdan and all participants. Okay, I have a question. Is Bitcoin considered as DeFi project, and how about the regulations?
Bitcoin.
Mm-mm.
Bitcoin is not DeFi project. DeFi project is basically, as far as I know, DeFi project are basically projects that are done on the EVM networks. Bitcoin is not a DeFi project per se, because you cannot do smart contract on the Bitcoin network. Bitcoin network is not catered for smart contract, unlike Ethereum. So all this DeFi are either based on Ethereum or all the side chain or the layer 2 solution chain. Those are where you can do a DeFi project, because you can do smart contract. So Bitcoin is not in terms of regulation. Of course, you can buy Bitcoin in Malaysia. It's already approved. The 8 tokens that I showed just now in the slide about the Malaysian digital asset landscape, all those 8 tokens are already approved by SC to be traded in Malaysia. So you can buy any of those 8 tokens legally. Of course, as far as you all know, there are many other exchanges you can buy, you see? So it depends on you. But if you want to really follow the law, there's only 8 tokens you can buy in Malaysia. But nobody stop you if you want to open a Binance account. Buka lah. Just put your VPN, buka Binance account. No more choice there. I know what I'm saying is not politically correct, but yeah, that's what people are doing anyway. Bitcoin is legal. Ethereum is legal. Even Bitcoin, Ethereum is Sharia compliant. Go ask Dr. Daud Bakar. He gave the fatwa. Go and read it up. For Ethereum and Bitcoin. Dr. Daud Bakar, as you know, our preeminent Sharia scholar, he has basically given a fatwa on this.
Okay, thank you, Mr. Rashdan. You are like, just know what I want to ask further, because actually after I ask about the regulation, I want to ask about the Sharia compliancy, because when we are in Malaysia or Indonesia, that is one of the mainstream question from the persons, which is about the Sharia compliance. So thank you for answering it further before I ask. Thank you, Mr. Rashdan.
Okay, just a little bit on Sharia compliance. I'm not expert in Sharia compliance, although in the past I've done sukuk, I've structured sukuk before and whatnot, and I've worked very closely with Dr. Daud Bakar when I was working in Dubai to structure some financial product when I was in ICD. But you, like I say, the digital asset is the back end part of it. That should not have any Sharia issue, because tokens are not basically, tokens are just computer codes. Unless they code an interest portion kat dalam tu, of course you have an issue. That code. And because remember, in a blockchain, when I start my code, I can't change my code. Yeah. Okay, so it's important on the Sharia compliant part to look into the nature of the actual project. That's what it is. Doesn't mean that the digital asset, you cannot lump the whole digital asset and say, oh, no, this is not Sharia compliant. You can't, because that is just the back end system. You have to look at the project, whether that project is Sharia compliant or not. Of course, if you buy a token issued by a lending protocol, because it's a lending protocol, then of course that is not Sharia compliant, because of the interest element. But if you are buying a project basically which support exchange of data, macam Chainlink, for example, or you buy any of these tokens to build something else or whatever product, nak tanam durian, for example, then where is the riba issue there? So you have to look into the actual project to come up with that. You cannot just lump it all together. That's my opinion in terms of Sharia compliant.
All right, clear, Mr. Rashdan. Thank you.
Thank you, Baiduri, and thank you, Mr. Rashdan. Since we have 2 minutes left, so do we have any short conclusion or advices to participants throughout this topic today?
I think digital asset is something that is the future. So I think if any of you have, learn coding. That's why I will give my last advice. Learn how to code. It is not that difficult. If I can start coding when I was 48 years old, you all can start coding when you're still young. Yeah. Even my daughters, they are doing accounting. I'm pushing them to do coding. Yeah. It's not that difficult. So learn coding. Whatever coding you learn is fine. Kalau bagus, go and learn JavaScript. Solidity, very easy. It's not that hard anyway. Just, if you can learn coding, you all still have a lot of time to do that. So, and I say it's not rocket science. Coding now is getting easier and easier. It's just like learning language. So learn coding. That's my last advice.
All right, thank you so much to our panel for answering the questions and willing to spend his precious time to share with us his knowledge and opinion about this topic. And also thank you to all participants for your questions too. Hope all this knowledge will benefit us. We will end our Q&A session here and may the answer satisfy all of your questions. As the saying goes, to every beginning, there's an ending. Our sincere appreciation and utmost thanks to our respected panel, hosts, and university mates that are willing to spend their time to join this talk program. We, from SecreFam, hope that all students can make use of the knowledge that they have gathered during this time in the future, inshallah. Ladies and gentlemen, well, I believe that we have finally come to the end of our talk. It has been a great day and wonderful morning with all of you. Again, thank you for your presence. I hope that all my mistakes and shortcomings can be forgiven. We close this program by reciting Tasbih Kafarah and Surah Al-Asr. All the participants may fill the Google form for the record of attendance. The link is in the chat box. We would like to take a group photo now, and I hope all the participants can turn on your camera to capture these memorable moments. So, come on.
Oh, so is that. Ada gambar kucing pun ada. Okay. Kucing.
Okay. So, you see, we have so many participants here. So, the one who gonna capture the picture, are you guys ready? Okay, so 1, 2, 3. One more. 1, 2, 3. 1, 2, 3. Freestyle. 1, 2, 3. 1, 2, 3. And last one. 1, 2, 3. Okay, thank you very much to all participants, our respected panel. Thank you for joining us today. And Assalamualaikum warahmatullahi wabarakatuh and have a good day.
Thank you so much, Mr.
Rashdan.
Rashdan.